Good morning, traders. Welcome to Thursday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check the news, see what's going on today and when, so that we're not taken by surprise. And if we look at today's news, for the most part, there's not a lot. There's a bunch of small and medium, a few medium news announcements. But then at 8:30, we have the initial jobless claims. That is definitely a big one. Forecast 757,000 versus the previous of 779. And then later this afternoon, we also have the U.S. federal budget. The forecast is negative 430 billion, which is another big mover. So we do have some pretty big moving news. Oh, and I missed the 11 o'clock Fed monetary policy reports as well. So we do have some big news, and it's relatively evenly spaced through the day. But the only issue is really during the morning session, there's not really anything. It kind of skips over. We've got some natural gas news, but the rest of the news kind of happens going into the afternoon. So the morning session might be a little bit slow, but given the volatility that we saw yesterday, fingers crossed, we can see that continue into today. So let's jump into some charts for today, today being 2/11 of 2021. First up, we come to the NASDAQ with, a beautiful flush yesterday, and that flushed all the way down to the lows of the channel and bounced right back up again. The big thing that stands out from yesterday, obviously, is how horribly the sellers will have been trapped. This drive down will likely have been at least the start of a lot of sellers trying to look for a big move down, thinking that the NASDAQ is just way overbought. I mean, the last couple days, we've even said these last few days have been really low volume. Be careful. We've even posted that in the chat room a few times. And this is an example of that, where we have that really big blow off, but if sellers tried getting continuation and didn't pay attention to the warning signs, well, they're getting ran over now. The last ditch that sellers have is up here in the L5 to try to push the market back down again. But if that fails, then it's back off to the highs of the channel, and we continue the cycle that we have been getting: big flush and a big rip all the way back up. Next up, we've got the S&P with a very nice dip all the way down to an L2. Bounced out and went ripping higher. Yesterday we were talking about an L1. Obviously this move down went a bit further, but they did find a base of support, and same thing as the NASDAQ: sell trap, sell trap, sell trap, off to the races. Just on the S&P now breaking above these highs. The NASDAQ was way up here. So there is a bit of a discrepancy in terms of how aggressive this seems to be when you're comparing it to the S&P or the NASDAQ. That aside, though, we have a fantastic bounce off of an L2, and buyers are still showing really good conviction. Even if it does pull back, it's more likely going to be sellers who get out at break even, realizing that they're wrong, and we see a secondary rally up either way. So buyers are going to be very interested on any pullback, but we are going to be coming into the day pretty high. Yesterday, if we look at what happened yesterday, there was the ETH open and the ETH close. So it's not like it really accomplished a whole lot there. And we might just kind of get stuck inside of that for a little while. So the high of that, the low of that, those are all areas that could potentially be fighting zones that we're going to have to deal with. Then over on gold, we have, oh man, well, a lot of the same. Not really much has changed, honestly. We're still in a range. Big pop to the upside, and it was immediately given back all the way down to the lows. Actually, they missed the lows by a little bit, then came down and kind of tried finishing the job and cycled back up. And that's some of the bigger clues that we have going on. And they're not very big clues, but some of the smaller clues, at least, that are relatively big given the context. We're not seeing the market tap these lows. These lows are still uncontested. The first time around was an attempt that failed. The second time around looked like they were going to get the job done, and that failed as well. So buyers are holding very aggressively ahead of an L2, and that might just be a reason for traders to try to prop the market up to allow it to pull back on time, right? To allow everything to kind of line up a bit better. So that zone at around 1830 to 1835, still a big hot spot, but as it stands, sellers seem like they're a bit underwater, and buyers are defending that L2 pullback zone really aggressively. Then we take a look at crude oil with, well, for the most part, still kind of the same context, even after inventories yesterday and the API and everything that's been going on for for oil. It didn't really do much. Yesterday, on the ETH session at least, opened here and closed here. Another day of just kind of non-action in the end of things. Lots of back and forth, lots of sideways. We may get stuck inside of that. But the one thing that does stand out is we've got major support at 58.10. And this support is by no means making it hard to find. This is standing out like a brick wall. So that is a good thing and sometimes a bad thing. When volume is made to look so blatantly obvious, it almost becomes a point of being suspicious as to why is it so obvious. Markets don't operate in that obvious of a sense. So there is definite support here at 58.10. It's very obvious, but don't be surprised if a little bit of manipulation comes its way and slops down through these 57s and then comes back up. Because a lot of traders are going to know there's going to be stops underneath that base where they're just a little bit too close to the market, and swing buyers will use that as an opportunity to try to gobble it back up. Next up, we've got the euro with some still sideways action. The euro has been sideways for a little while, but the one important caveat here is inside of this wedge, we're also holding a very nice L1, and this L1 in the sequence is the third, which makes it that much more powerful. So buyers showing and demonstrating this support here the first time around, okay, that's cool, but then they failed. When we're coming back down, maybe sellers chop it through when we start a new bear trend. Oh, wait. Bulls show back up to the party. Sellers are taken a bit by surprise. When they come back, they think maybe just a reload, and that one fails too. Now they're thinking, what the heck is going on? So they're trying to sell down. So you can see the context that's going on here. If the sellers fail and this starts rolling back up, they're going to give up and we'll see a roll back higher. But if the market starts falling a bit lower and starts cracking underneath this, then it's likely that we're going to be hunting for larger support. And larger support, we really don't have any on the way down until we start getting towards the 1.21s. Then before that's the 1.208s. It starts spacing out pretty far to where the door opens up pretty wide. Then over on the crypto side with Bitcoin catching a nice rally to the upside off of the base of the channel. The channel can be modified just a little bit. This channel does look just a touch different from yesterday. It was a little bit tighter, anchored on that next high. But either way, we've got that nice bounce off of the channel lows. We have a conviction move back to the upside with sellers getting trapped and potentially even being given the chance to get out of break even before popping higher. Bulls maybe failed, and now it rolled back up again. So this move higher is going to take sellers a little bit by surprise. Although, to be fair, I don't think by surprise as much as it could have. They were already given a chance to get out. But this rolling higher will likely see some selling at the channel highs. That would make sense. But if it starts breaking a bit further, that's where we start seeing the surprise move of all of these sellers getting stuck thinking, there's no way it can make it up here. I'm going to put my stop up here. Oh crap, it's all the way up here. And we see it stop run through, and all of a sudden we're squeezing up to 50,000. So it can catch some serious legs to the upside here, especially given the amount of sell side failure that's taken place. The bulls have a really, really good shot. And then finally over on Ethereum, we've got, this one's a bit funky. It could potentially be a megaphone if the market wants to try to make a higher high, or if we utilize these previous lows, sometimes we'll see the market want to respond to a channel off of that. So we've got a couple different layers of interest that we can use. We've got the falling potential channel. It is unconfirmed, obviously. But if it starts breaking through that and doesn't really show, then the next area would be up towards the 1860s. Either way, buyers were looking for an L3, and they've only had 2 bounces down here. I mean, I guess maybe 3 if you split that one up. So usually, under normal market conditions, you would see one more leg down. And that lines up almost perfectly with an L3 to the upside in the bottom of the channel, bottom of the megaphone. Everything stacks up down in those 1660s for a push right back up again. That said, we do have a lot of sellers who have already gotten out. It's squeezing, so don't be surprised if it starts breaking through the top. We might not get that pullback at all before seeing this thing ramp up to 2,000. Alrighty, well that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. I hope you have a great trading day today, and we will see you all in the next. Thanks.